just looking at the market, somewhat stable after that sharp drop that you had from where we left it off yesterday, 109 points lower. KEI clearly your biggest star today. And then the metals trade from the word go has been holding out very well. So be it in Nalco, which is staging a move of over 4.25%, or for that matter, Hindalco and JSW, along with Tata Steel, even though some of these names have come off from the day's highs, but they're still holding good. Hindalco is up a good 2% as we speak right now, and JSW as well is a shade under 1% higher as we speak. But Daljit Kohli as well joins in on the show right now to talk about what his view is on the market. Daljit, some renewed vigor afternoon firstly on the entire metals pack. Anything that's looking good and investable? Daljit, you'll have to unmute yourself.
Sorry. Thank you for having me on your show, and apologies for this mute. So we are positive on metals as a sector. And in fact, I think copper is one area which we think has a very long runway to go from here also. So there we have very few stocks in copper which are there, or you can play it indirectly through some of the conglomerates also. So we can play that theme. And then aluminum. I think aluminum also is doing very well. In fact, copper and aluminum go hand in hand. So if one is doing well, the other one is also normally doing well. We think that all this turmoil in the West, Middle East getting subsided, probably that will again lead to a lot of renewed demand for metals. And in that, both these metals will be the first ones to perform. Steel, we are slightly sluggish because there you have a problem of realization. So EBITDA per ton gets impacted on both the sides. Your realization doesn't go up, and the cost, coking coal costs are going up, freight costs are going up. So there they might have a little bit of pressure on their profitability. But non-ferrous, both these copper and aluminum, I think are good for a long runway from here.
Shivangi, let me come to you. KEI Industries, that's the one stock which is perked up, and how 9% higher now on KEI in terms of the uptick. What next on this one? What's the view?
Yes, Harsh, KEI, we've seen that the stock has rallied very well. Price volume surge to be seen today. It has negated its lower highs, lower lows formation of the last 6 weeks, and we've seen that all the indicators have of course jumped up because of the price surge today. But overall, this stock has been quite volatile. Within a band or within a range, we've seen that this stock has kind of tend to show some signs of exhaustion at the higher levels. So we'll wait and watch for this one at these levels, and if it manages to hold above 5,400 levels, then we could actually continue in this, or else it would mean just put a strict stop loss for this one.
Okay. That's the take coming in on KEI Industries. The other one, which is really a casualty right now, is UPL. Let's bring out that stock as well for you, because the news, of course, is given that the CEO of UPL is looking to step down with effect from this month end, and which is why you're seeing a bit of a knee-jerk reaction come by on UPL. Although when we chatted with the management yesterday, their commentary and the visibility about the quarters going forward was extremely strong. In fact, if I recall, it's been the best quarter that they've posted in the last 7. But yesterday, too, the stock was a little bit under pressure. And today as well, it's seeing a knock of about almost 5.6%. But Daljit, wanted your sense in on this entire fertilizer and chemical pack, and whether you think all the uncertainties are behind us, or because of the West Asia situation, still would you say there are bottlenecks?
No, so on agrochemicals, we are positive, and barring UPL, we buy anything else. So why? Because this stock has too many moving parts. There are so many divisions. One moves up, another one drags it. So that problem always remains. And second, it has too much of debt. And then on third of that is now the management changeovers and all these instability on that part. So otherwise, agrochemicals, I think, is in for a good time. In fact, specialty chemical as a whole, if you see, after 2-3 years of inventory overhang. Most of these companies are now showing signs that this destocking of inventory is over now. They are getting order flows back. So we've seen some of the companies have already reported numbers. They have done well there. So I think this area, specialty chemicals, within that agrochemicals, both are positive. And we are actually, as a disclosure, we are holding 2-3 stocks in that.
Okay, ONGC expected to come out with numbers, and we have our newest research analyst, Sunidhi, who is going to track oil and gas and is tracking oil and gas. She is here. Firstly, congratulations, Sunidhi, on the debut. What can we expect from ONGC in terms of numbers?
ONGC is expected to post a strong Q1 for FY27 on the back of higher realizations. While its revenue is expected to increase by around 25% quarter-on-quarter, its EBITDA is expected to increase by more than 50%, while its net profits could even double. This will be on the back of higher realizations and not production, because production is expected to be subdued during the quarter. While crude oil production is expected to decline by 2 to 4% year-on-year, its gas production is also expected to decline by around 2 to 3% year-on-year. So the main focus will not be on production, but on realizations. Companies' crude oil realizations are expected to reach a number higher than $100 per barrel, while gas realizations are expected to increase by 30% YOY due to higher contribution by new well gas, which attracts higher prices. So increased realization along with lower operational expenses are going to result in profitability for the company. Key monitorables going ahead would include things like any commentary on production, on realizations, on capex plans for FY27, along with the earlier given guidance of 7 to 8% increase in gas production for FY27.
Okay, that's what to expect from ONGC when it's going to be declaring its numbers shortly. But the Oil Ministry has also sought to reassure consumers over fuel quality, saying that OMCs are conducting regular checks across the country. The ministry also added that strict action will be taken against any instance of contamination or adulteration in the E20 fuel. Kuldeep is here with the latest.
Well, following the media reports that Siam has written to the government flagging severe issues with E20 petrol, now the Ministry of Petroleum has come out with a statement, and it stated that strict action will be taken in case any contamination or adulteration is found in any retail outlet. The ministry also stated that OMCs have also been instructed to take proactive steps to detect any possible contamination in the entire fuel supply chain. Further, the ministry stated that fuel quality is being monitored on a regular basis by OMCs, and advanced and elaborate testing protocols are already in place. The ministry also stated that further checks have been instituted, including water ingress testing 8 to 12 times a day in over 87,000 outlets. Well, as per the reports, Siam has reportedly stated in its letter that the chloride contamination in fuel samples reaching up to 500 mg per kg linked to corrosion and component wear. However, the ministry has stated that over 2,000 samples have also been tested for chloride sulfide, and only 2 cases of chloride contamination have been found in the entire country till now, and sales from those pumps were suspended immediately. So this is the response that Ministry of Petroleum has given. It has shared its response over social media platform X.
Okay, thank you so much for that, Kuldeep. What we'll do is slip in a very short break, take a bit of a breather, come back, plenty to talk about. QSR is essentially one of those pockets which is really buzzing in trade today. We'll speak about that and more on the other side. Stay with us. Welcome back. And QSR, essentially, it is Restaurant Brands India, or Restaurant Brands Asia, I beg your pardon, which is absolutely a buzz, locked in upper circuit, 20% higher on that stock. Just the strength with regard to the top line, that's one. But of course, even the margins, the gross margins were impressive this time around. And Daljit, this has been a space which seems to be, quietly warming up on the sidelines. Do you believe that we're poised for a larger rally now, and could it be multi-quarters, or will this just be a 1 or 2 quarter kind of phenomena?
Very difficult to say at this point of time. I think this is the first result which after many quarters they have started showing some positivity, and we've seen the rub-off on Jubilant Food also, that is also showing some good traction. Last 2 quarters Jubilant Food numbers were stable, so probably the cost pressures are now reducing and on the top line, but problem is on the top line growth. No? So I think this is too early to say that this kind of trend will continue, and therefore we are not extrapolating it. There are in this space, it's actually a very crowded space. No? There are so many players there, and now with this D2C brands, with unlisted companies, so many other brands available, competition is very, very stiff. So I think we are avoiding this space. We are not looking at this despite these good numbers today.
Shivangi, do you have a view on any of these? You had even a Mrs. Bector's, for example, which saw a decent jump up a couple of weeks back. Now it is Restaurant Brands Asia. How do you look at the space as a whole, QSR, and any specific names which you're liking?
QSR space stocks, we've seen, of course, some of the stocks have done quite well. But of course, my take would be on some of the new age companies. Eternal has been doing quite well. And along with that, if we add to this new age company space, there's Paytm also that has done quite well. So this basket could be kept on radar. But of course, Eternal, we are looking at a positional as well as a trading point of view. And the stock is looking quite positive. We could look at Eternal for the next roundabout levels of 320 levels with a support base of 303 levels.
Right, okay, that's Eternal, and that's what Shivangi's been spotting on the cards, or charts, I should say here. In the meantime, it's pretty much status quo. The life insurers, some of the FMCG names, they are the ones which are acutely under pressure. Reliance is the other one, a solid 1.25% dip, and this after that aberration also played out in the stock price in the CAS adjustment. But Kunal, at 12.96, where does the stock go from here?
Well, I think it's been sideways for last, I think, 4-5 months. It's been stuck at this 1300 range, band, plus minus 30-40 points for Reliance Industries. So I really don't see any immediate perk up of trend for Reliance as a stock. You know, even on the F&O side, I think we've not seen any major change in terms of the open interest trend for Reliance Industries. That tells you that maybe the usual view for the stock price, which is to try and remain into a trading range, I think that will continue for the stock in the near term. And I think we are hitting into that zone where a few of those large cap stocks have actually extended this phase of consolidation. So there either has to be a trigger for these stocks to try and break past about those bands of ranges for themselves, for example, for Reliance Industries, or else there has to be a strong bout of short covering, which I think is as of now missing into many of these stocks.
Okay, that's that on Reliance. On the other hand, Jio Financials is one which has gone really from strength to strength. Shivangi, what is your observation on the charts of Jio Financial?
We've seen that this one had kind of made a very lackluster move probably in the last 2 years. But of lately, we've seen it build up strength from the last 7 odd trading session, to be precise. We've seen volumes have been erratic on this one, so there would be some bit of consolidation or some bit of slow and steady move out here. But this one's looking good for a recovery at these levels. Of course, recovery would be slow and steady. So 280 is the next marks that we're looking at, with a support base of 260.
Okay, thank you so much for that, Shivangi. Shivangi, a couple of other names, and I want to quickly mark out a few. There's Graphite, again on the back of numbers. The stock is perked up 8% now in trade. You also have a Prince Pipes on the back of numbers. I wonder if you have a view on either of these or any observations at all in terms of the move.
Graphite has kind of moved up quite well, almost 8% today. We've seen that this one has consolidated from the last 6 months in a band. And even though it did attempt to cross 800 levels, it failed to hold above the same. So overall, there is some bit of capped upside that we could look at this stock, but immediate basis, one could look at the momentum carrying on for 750 odd levels, with a support at 700 zones.
Okay. I want to also quickly quiz Daljit. Give us a sense with regard to how you would play metals at this point of time. Daljit, is there a view that you have?
Yes, we discussed metals
Yes.
a few minutes back.
Yes, but
about
graphite in particular, HEG,
yeah,
graphite and the
is
like.
definitely yes. Graphite and HEG. In fact, HEG results were a few days back. They were also good results. So we were expecting that the graphite results will also be good. Both these companies are with this needle coke prices going up. They have this, and the demand from the steel side is very much intact. In fact, one of the international producers of the same has shut down its capacity. So that benefit is also coming to these guys. So I think both these companies, HEG as well as graphite, will do well. The stock valuation wise also, they're not obscenely priced. Of course, some they moved up a little bit, but still at this level also it looks attractive.
Okay, that's the take. Auto Ank, Daljit, is that something that you're liking? And if so, how do you play that space?
In fact, this is the area where we have increased our exposure in the last 10, 15 days or maybe a month or so. Quite a few names have been added. One, that EV two-wheeler story we like very much. So the ancillaries that make things for these EV two-wheelers and the EV two-wheeler player itself. Today it has been in buzz. It has done very well on the results it has shown. So we have been very positive on this area for quite some time, and the ancillaries which are which are supplying these products to these guys, they are also doing very well. Then also other auto ancillaries also, like the ones which are doing a lot of things for four-wheelers, forging. Again, there is huge demand, pent-up demand. There are products which are going into three-wheelers, EV three-wheelers as well as ICE three-wheelers. So it's a wide variety. There is a lot, and then some of these auto ancillaries have moved towards aerospace. So they are started doing high precision engineering products for aeroplanes and things related to that. So even those companies, they are doing well. And disclosure, we have 3 or 4 companies in our portfolio.
Right. Well, the stock right now on the cards is alkyl amines, and that's been soaring after a very strong first quarter show. In fact, Darshita is here to highlight what the earnings have been, and given the stock spike, Darshita, now of over 6%.
Right. Alkyl Amines has delivered a strong Q1 FY27 result with the performance beating expectations across the board. Now, starting off first with the financials, where the revenue rose 30% on a year-on-year basis, coming in at 528 crore, and the net profit has almost doubled to nearly 95 crore. EBITDA jumped 75%, and the margins expanded sharply from 18.9% to now 25.3%, reflecting a significant improvement in the operating performance. Now, the biggest takeaway here is that revenue, EBITDA, margins and profit all came in ahead of what the street was estimating, making it a clear beat across the parameters. Now, apart from the numbers, the company has also announced key management changes as part of its succession planning, where Yogesh Kothari has been redesignated as executive chairman, while Kirat Patel and Sunit Kothari has been appointed as joint managing directors. Sunit is the son of Yogesh Kothari, so this is marking this as an important step in the company's long-term leadership transition coming forward.
Right, okay, that's alkyl amines and a big buzzer in trade. We'll take a very quick break. When we'll come back, we'll continue our market discussion with all of our experts.
Welcome back, and a slew of earnings will continue coming our way, and Bharti Airtel will be one of them. Set to announce their June print, where the street is estimating a stable quarter, with profitability expected to jump 15% on a sequential basis. Darshita is back with us to give us a sense of what the key monitorables are and what the print will look like.
Right, Bharti Airtel is set to report its Q1 FY27 results, and the street is expecting another steady quarter from the company, which will be driven by strong momentum in its India wireless business. Now, starting off first with financials, where the revenue is expected to come in at around 56,900 crores, which is up nearly 3% on a sequential basis. Likewise, EBITDA is also expected to improve by 3% on a sequential basis, while net profit could see a stronger jump of nearly 17%, coming in at around 8,500 crore, and the margins are expected to improve slightly. Now, operationally, the India wireless business is likely to remain the key growth driver, with revenue expected to grow at around 2.5% on a QOQ basis, and the ARPU is estimated at around 260 rupee, which reflects continued premiumization and the improved subscriber quality. Now, apart from the wireless business, the street will also watch for the performance in its home business, enterprises segment, and Industars. And the key monitorable this quarter will be subscriber addition, ARPU trends, business-wise performance, and any commentary and update on the monetization of the 5G use cases.
Okay, that's the expectation from Bharti. In the meantime, Nykaa is set to announce their Q1 print as well, and the BPC segment is set to report a 26 to 27.5% year-on-year growth. Snehi is back with us to tell us about the key monitorables.
Well, yes, so all eyes are going to be on Nykaa, going to be reporting its numbers later today, and we're expecting to see a very good show from Nykaa this time around. Remember when the company came out with their updates a few weeks ago, the update that was provided by the company for Q1 was very strong. On a consolidated year-on-year basis, we're expecting the revenue to come in at 2,763 crore rupees, which is an uptick of 28.2% on a year-on-year basis. And the management in their update had said that this growth will be in 30s, so we'll see where this number finally ends up coming. EBITDA is expected to grow 63% at 230 crores. We're expecting to see a very strong up move in the overall profitability of the company. More than a 3.5 times jump is what we're expecting to see year on year at 83 crores. Margins are also seen expanding to 180 bips at 8.3% compared to 6.5% this time last year. Some important expectations to know about that the street is building in. The consolidated gross merchandise value, that's the GMV, and the net sales value, that's the NSV growth, is expected in early 30s. Beauty and personal care segment is expected to report 27.5% and 26% year-on-year growth in both GMV and NSV respectively. The management update sees this number in late 20s in both metrics, so in line. And fashion NSV growth in mid-50s is seen as per the management update. Fashion revenue growth is seen in mid-20s, and management says this could be near 50s. So the street is penciling in 20s, management saying 50s for fashion. We'll be watching out for where this number comes, but yes, the update was quite strong. The operating leverage in beauty and personal care, the turnaround in profitability in fashion will drive margin expansion. So when the numbers do come out later today, some factors to watch out for are going to be demand trends in BPC, the performance by the house of Nykaa, contribution to and the profitability of the fashion segment, new customer additions, and store expansion plans. So watch out for Nykaa, but we're expecting a good set of numbers.
Okay, thank you so much for that, Snehi. In fact, there's also Greaves Cotton. That stock is taking a beating today in trade after the announcement of its quarterly numbers. I mean, the YOY number looks very healthy in terms of growth, but it's been followed in equal gusto by the cost of materials, which have gone up substantially. There's been a very, very strong push in terms of costs, which has led to margins shrinking. I'll just quickly pull out the numbers for you, but margins, therefore, have come down quite sharply. The EBITDA is down, or rather is flat, despite a 31% growth on the top line. So EBITDA has actually come down from 7.6% to 5.8%, and that doesn't look pretty at all. And therefore, you're seeing that 14% knock on the stock. In fact, the lowest margins in over 5 quarters is what we're seeing Greaves Cotton clock, as a result of which you're seeing this pressure. Is this, I know, Daljit, you seem to be liking Auto Ank. Is this one something which one should buy on dips at all? Is that something you would advise?
No, I think we'll stick with the bigger guys because this area is very competitive. It's going to be very difficult for the smaller ones to make space for them. There is making a differentiation in the product itself is a big task, and then fighting in the market. No, that two things which are very important for smaller companies. It is very difficult, I think. And when the larger ones are already doing very well, why to look at this one? So I think we are sticking to the top one.
Well, Greaves Cotton, that definitely is very sharply reacting to its numbers. Other than that, of course, while we reach the gas settlement, you are seeing about a 95-point downtick coming in for the Nifty futures. The spot Nifty, 310 points lower is where it's currently at. And I think the sensex rate is much different than that. Not the India VIX. The sensex rate should come off for you on your screens. About 314 points lower there, about 0.4% downtick is what it's seeing. Kunal, revisit those extremely volatile charts from yesterday, and do you think the settlement is a lot better than where we were same time yesterday?
Yeah, I think the best way to try and spot the difference in settlement is to see what's happening on the futures, because yesterday the futures were at a 100-point negative towards a 100-point premium. So a net difference of 175, 180 points yesterday. Today, so far, I think it's the premium is showing a slight jump of 20-25 points, which means that the net effect of the closing on the stock prices could probably be on the slightly positive side. So we may probably have fallen from that 310 levels on the negative 310 on the index to maybe sub 300 on the downside for the index. That 20-30 points of an extra jump is what we may expect on the stock specific. But no major changes which is happening on the large cap front, at least in terms of the last 5-7 minutes of this pre-open.
So absolutely okay right now on HDFC Bank, ICICI Bank, those very varied rates from yesterday?
Yeah. So at least that kind of a volatility is not happening. Yesterday there were other stocks like Grasim, Interglobe Aviation, etc., which had shown that kind of a exaggerated move. So far, it doesn't look like that it's trickling to those few odd large cap names. It's actually on the non-F&O stocks where you're seeing the selling, but then they generally are not affected because of this cash closing.
Look at MapMy India. Came out with numbers. The stock is taking a 6% dive, in fact, nose dive on the back of the numbers. You've seen margins healthy per se on a very, very high base of 46%. And therefore, you're seeing that dive on the stock price. I'll just quickly read out the numbers. Revenue is up 15% on a YOY basis. EBITDA is flat, in fact, down 1% or thereabouts. And then you have profit, which is up around 8.5% with margins shrinking from 46.5% to 40%. So that's what's causing pressure on the stock. We'll obviously have to wait and watch on the last few minutes of closing as to how this shapes up. But broadly, MapMy India is one of them. The other one is Zydus Life. They've gotten US FDA approval for indocyanine green for injections, which is a 180-day CGT with a 180-day CGT exclusivity. So both of those stocks will be in focus as we wind down for the day. But broadly, that's how we are winding up. Shivangi, quick thoughts with regard to the index move today. What's the view?
Looking at the index moves, of course, we've seen that the index has kind of rallied up by more than 1,000 points in the last 7 days. So some bit of consolidation or profit taking, as we may say, was seen today. But of course, last hour of the previous session was quite volatile. We've seen that this has started to settle in today's session, which is expected to be settled in the next 3 to 4 sessions. So overall, we'll be expecting this to become much smoother, of course. But the index move, as we say, in levels perspective, it now needs to cross and hold above 24,500 for the next bullish biasness to begin and commence for the next up move towards 24,800. But August series, no matter what, has started on a positive note, and we are still on the buy and decline stance with a support of 24,400 marks.
Right. Okay. That's the call coming in on the index. Just looking at the sectoral composition as well today, and clearly it's been metals which has been the key winner all the way. That said, chemicals, realty, FMCG, they're the ones which have had, or rather have been, on the lagging end. Kunal, do you sense metals will take the lead tomorrow too?
Yeah, there's a possibility that I think metals can make a strong and a durable comeback with the drop in dollar index, with the mean retracements and the reversion completed for many of the metal stocks. I would sense that we could probably be at a cusp where the metal stocks can perform very well for the entire month. You've seen names like Hindalco I think rallying up almost 50-60 points from its recent lows, 930, 940, now 1000 plus. SAIL has apparently done very well. It's managed to make a very strong comeback. JSW Steel is the other stock which I think should probably be a very strong breakout candidate in the near term, trading at 1280 to 90 levels. So I would sense that these three metal names could probably be the ones which traders could look at a buy at current levels.
I'll quickly mark out some other. There's Sambhav Steel Tubes. The stock is up 3.5%. We spoke with management as well. Gulf Oil is up around 3.7 odd percent in trade at very, very close to close now. 9% high on KEI. That's been the standout, right? Along with restaurant brands, that one is locked in upper circuit, 20% higher. KEI, I mean, you look at the intraday chart and you'd see how the stock has gone from strength to strength, opened 3 to 4% higher. We're currently sitting at nearly 10% in terms of gains. Now just around 150 odd points from the all-time highs for KEI. So today's move obviously driving the stock higher towards its near all-time highs. Let me also talk about realty because that's the space where there has been some bit of pain today. And DLF's numbers obviously didn't help much. But the entire pack looking difficult. 4%, 4.5% low on Prestige, 4.5% low on Oberoi, DLF down nearly 4%. Godrej Properties down 2.7%. So across the board, everything except Anantraj. That's the only one which is standing out in terms of the lone gainer on the Nifty Realty Index. The advanced decline has flipped in the first hour of trade today. We were starting to see positive cues, but not to be. We've just seen 180 advances to nearly 320 declines in trade today. Ather has been the big standout outperformer, 4.25% high on Ather. Graphite is up 7.5% again on the back of numbers. There's CG Power, which is up 6.5%. I wonder, Shivangi, is there a view that you have on Ather? Shivangi, if you can unmute, please.
Yes, talking about CG Power, we've seen that, this one has kind of shown a very good short covering move of lately and with good amount of, surge in volumes. Overall, we've seen that this space has been quite good and the support is still kind of intact of 800 levels where the bounce back was seen. So CG Power looks quite positive for the next up move towards 910 levels. But of course, the move would be little, slow and steady. Given the kind of, bottoming out structure that we're still forming it.
Look at that aberration coming in on the closing auction session. Just bring up the Nifty intraday graph because while we were closing in about 300 points lower, from there we've recovered, I think, almost about over 100 points and now closing in lower by 160 points. 24,600 is back on the ticker. But Rajit, this cash settlement aside, what is it that you've made of the earnings quality so far? Definitely managed to deliver a lot better than what the street was anticipating stepping into Q1. But having said that, from within mid and small caps, any earnings and companies which have stood out?
No, definitely this earnings season has surprised on the positive side because before the earnings, we were expecting some kind of pressure on especially on the margins. This impact of Middle East war and then wholesale price index going up for almost every commodity. We were thinking that probably margins will shrink much more than what companies have seen. Actually, many of the companies have not shown any decrease in the margins. So that is a good surprise. But one thing we have to remember is that most of the laggards are still to come with the results, which will happen in next 1 week or so. So good ones always come fast earlier. So till now, but almost half of them have come. And this result has been very positive. However, that pressure on margin, that issue still remains because it might also happen that people were having inventory at that time. So the war impact did not show up properly. fully into the numbers. So that little bit of nagging worry will still remain for Q2. And other important thing to watch out will be the top line growth. Now, top line growth has been slightly muted, on an average 15% kind of thing, on the broader markets, on the top frontliners, 10-15% is good enough. But for the broader markets, that is slightly lower than the expectation. And if you have to catch up, then probably you need more than 20%. So we will have to watch out these two things in next quarter too. But till now, I think all across numbers are good. In fact, it has given us a lot of confidence that, and if you see the undercurrent in the broader market, no, the stocks which were languishing for 2 years, 3 years, they have started showing good numbers. No, you just talked about some alkylamine and other numbers. See the kind of performance these stocks have given. We were talking about Map My India numbers. Quarter 4 were good. This quarter was expected to be good, but slightly languishing. But still, it's in that same line. No, like that, there are mid-tier IT companies, mid-tier auto ancillary companies. So there is a broad-based, I think, growth shown, and that is giving a confidence that probably broader markets will do much better from here onwards. And over the year end, maybe next 6 months to 1 year, we will see much bigger numbers in the overall market. So returns should be good this time.
Daljit, very quick view on LIC. That stock is down 9%, of course, at close. Would you probably go out and buy those good, strong, traction in the OFS which has been put out?
So insurance is an area which has not given returns to investors for a very, very long time. Although it remains to be a very go-to area for everybody, because fundamentally we know we are such an under-penetrated country. For insurance, there is a lot of growth available. These guys can grow for many, many years continuously. But somehow these stocks have not given too much of returns. And LIC per se has actually not shown too much of growth on the average premium earned, APE, on VNB margins, all those things. It has not shown that kind of growth. So I think within the insurance itself, LIC has been underperformer. Now with this 10% fall, I think valuation wise, it will become very attractive. So if somebody is having a view of 3 years and long only fund, not worried about too much of short-term returns, then it might suit them. But for alpha generators, I think for us, it will be still avoid.
Okay, that's that on LIC, closing in the day about almost 8.5% lower. Having said that, of course, the OFS has been quite the success. The OFS got subscribed almost 1x, including the green shoe option, and the government has already managed to garner about 30,000 crore rupees from LIC. 391.30 is where it is closing in for the day. Kunal, a quick call for tomorrow and how you propose we trade, what direction the market is going to take?
See, I think so far we can just say that the last 2 days we've managed to protect 24,500. Now, including this, cash closing for yesterday and today, we've probably protected 24,500 on the closing basis today. Of course, we would want the markets to be going into a much more stronger day throughout, rather than just those last 15-20 minutes of adjusted closing, which benefits the market. But nevertheless, I think we've managed to protect the key supports for the indices. But the bigger part which is lacking in the markets is the large cap participation, which has not been still into a full throttle. So just to give a stat, we're looking at Nifty mid cap 50 and small cap 50 indices, and almost 65 to 70% of the stocks are trading above their 20 and their 50-day moving averages in the small cap and the mid cap universe. But from the large cap 50 or the Nifty 50 basket, we're still at a point where 50-55% of the stocks are trading below their 20s in the 50-day moving averages. So that's the bigger concern for the markets.
Okay. All right. Shivangi, any observations from today's moves that we've seen, last 10 minutes or?
Yes, the prices have kind of settled in from the previous session, and today we've seen that the movement has been quite smoother. And looking at, of course, the last 10 minutes, we've seen some bit of, advantage in the last 10 minutes. But overall, we have to look at the CAS in the long term rather than in the last 2 to 3 sessions.
Okay. What's the view, Shivangi, with regard to IT? I mean, we didn't talk much about that sector. Is there a view there that you have?
I think at the entire IT pack, we've seen that this index has bottomed out, and we've seen that this has kind of given a good short covering move in the last 5 odd weeks. Of course, led by some of the mid-cap IT space names, but overall, we've seen that some bit of consolidation could be expected here. We've seen that this index kind of rallied in the end of the July series, but it has to show follow-up buying again to commence the next leg of rally. But a few stocks on radar would be Coforge and Coforge is one of the strongest out of the lot, and this would be on radar.
Well, it's quite intriguing. While we're talking about Ather Energy, and that was the big buzzer today, look at a Hero MotoCorp, which has an investment in Ather. That also has held higher by about 3%. And Daljit, it's quite fascinating to see the entire two-wheeler space taken Ola out of the equation. But both EVs, the hybrid and the ICE models amidst two-wheelers have done very well. Very impressive earnings from a TVS, from a Bajaj Auto as well. And of course, we all know Ather's performance.
Yes, definitely. In fact, this has been the most outstanding performers sector, if you would say, from this result. And nobody had thought auto numbers are out every month. We all know that what kind of numbers these guys are going to report. But the kind of margin performance and the way things have moved for these two-wheelers, especially all three of them, and TVS doing fantastically well on EV penetration, and then Ather, of course, they are constrained by capacity, not by the demand. So I think what many people were a few months back expecting that penetration will take a longer time. Last 2 quarters have shown that penetration, at least in two and three wheeler, EV penetration has been much faster than anybody would have thought. The passenger vehicle penetration is still on a slower pace. But I think ultimately that will pick up. Maybe that is because of the charging problems still not getting resolved. But two-wheeler, I think people have overcome that anxiety of charging, etc. So EV penetration is doing very well there. And that is what these companies are all showing.
Kunal, if I were to take your thoughts on today's session, these last 10 odd minutes in terms of everything that's playing out, how would you sum it up?
So again, I think what we've seen is, the last 10 minutes, the Nifty futures have gone back into a discount. We have closed at 60 points discount to the spot levels, which means that the markets will probably back again adjust tomorrow on the slight downside. But at least I'm expecting that the intensity to the downside may be a lot more lesser than what we saw today at the start. I would expect maybe a 70-80 point kind of a downtick for the index to start off with. But then, as I said earlier, that if the large cap stocks manage to make some sort of a comeback, then I think the chances of the index sustaining the mild downtick and then trying to recover on the flattish side could be a lot more stronger possibility tomorrow.
Okay, that's the take on which way the markets are going to be heading tomorrow. But Daljit, Shivangi, Kunal, we'll let you guys go on that note. Thanks as always for joining in. The MPC meet, the focus now changes on to that. So let me bring on board Ankur to figure out what his poll of economists and bankers is throwing up.
Yes, Monetary Policy Committee is likely to hold rates at 5.25% this time, and the expectation is that that stance will also be retained to neutral. Apart from that, the important thing to watch out for in this monetary policy will be the commentary which will come in for inflation, because if you look at the June numbers particularly, that has surpassed 4% mark. It does remain within the tolerance band of Reserve Bank of India, but yes, it has crossed 4%. But more importantly, the WPI data was also showing that it is inching towards 10% mark. So overall, the IAP growth numbers does support the growth numbers, which is at 7.3%. But if you see the crude prices, if you see rupee levels, which continues to be near 95, it will be interesting what would be the commentary of Reserve Bank of India governor. And more importantly, whether or not there is a tinkering in the growth forecast for Reserve Bank of India, and how does FY27 inflation trajectory looks for Reserve Bank of India, and especially the commentary which is expected on FCNRB deposits, because ET now had reported that it has crossed 2013 numbers and it has now gone towards a $36 billion mark as on July 31.
Thank you so much for that, Ankur. That's, of course, with regard to the monetary policy and what the outcome may look like tomorrow. Let's quickly look at Marico's numbers on your screen. 3657, so a 23% jump on the revenue count. Overall, you're seeing very decent growth, 25% growth, in fact, on EBITDA as well. And margins at 20.7%, actually getting better on a YOY basis, that margin number. Profit, in fact, the cost of raw materials have also gone up by 20%, so very well controlled in that sense from a raw material cost perspective, and profit up 25%. So it's a strong set of numbers coming in from Marico as a result. Q1 is generally a stronger quarter, but this time it's coming a little bit more stronger than that of last year. But in fact, completely timed out on this edition of Closing Trades. In fact, I'm going to toss it across and put the spotlight on gold in our special segment, Commodity Corner, where ET Now's Ashesha Advaryu speaks to Sachin Jain. He's the Regional CEO, India, at the World Gold Council.
Hello and a warm welcome. You've joined us on Commodity Central right here on ET Now. I'm Ashesha Advaryu, and today on the show we are going to put the spotlight on the yellow metal. We've seen a lot of volatility, especially on the back of West Asia crisis. So what is leading to this? What's the outlook and what's happening within the gold industry? To understand that in greater detail, we are now joined by Mr. Jain of Gold Council, World Gold Council, now joining us. Mr. Jain, thank you so much for taking your time out and joining us here on ET Now, and you're joining us from the sidelines of a conference. So let's start with that. That's the Swarnim Udan 2047 launch, which outlines a strategic vision to transform India's gold ecosystem from a traditional store of wealth into a strategic national asset. If you can take us through the rationale, what the event is all about, and what are the key takeaways, most importantly.
First and foremost, a big thanks to you to get us on the platform. And as you rightly said, Swarnim Udan is not just a report on the gold industry. It's a strategic roadmap for the gold business, but also how gold can become an important pillar for India becoming a superpower. And what we've done is we've studied the whole outline of what 2047 envisions, what are the possibilities for India, and how gold truly can be transformed into this long-term vision. And there are 4 or 5 areas of work that we've done around it. We studied the futurist, we've worked with the government, and we looked at how the industry and the industry participants, but we looked at 5 or 6 broad areas of work in this. Firstly, we think if the right levers are pressed, India will mine its own gold. And in the next decade, we believe between 20 to 25% of the gold that we consume has the potential to come from our own mines. And that'll kick off foreign direct investment, that'll kick off employment and other areas. We think the second pillar is around how India can become the jeweler to the world, and how manufacturing needs to propel, how understanding of the global markets need to propel. Like today, we export about 100 tons of gold, but that's purely true for the Indian diaspora, and how we expand that to the global consumption, and that can expand on. The third is on the financialization of gold. And we all know that one of the largest mines in the world is the gold sitting in our households. And how can that translate and come into the formal ecosystem to build up capital, to bring liquidity and other areas of digitization? That's the third broad pillar. The fourth pillar is the consumer itself, and how the consumer is evolving. The notions are changing, the requirements are changing, the brands will become important. I think that's the fourth area of work. And the fifth is how gold can be strategically looked at into future industries of microprocessing, of aerospace travel, And globally, about 8% of the world's gold is used for AI chips and supersonic chips. And India has not as yet become a dominant player there. And we think that could be a very important area. So these are the 4 or 5 key areas on which Swarnim Plan 2047 is built on.
Okay, so that's as far as the long-term vision is concerned and how India could be a big player in the global gold market. But Mr. Jain, let's also talk a little bit about short and medium term and look at the kind of volatility that we have seen in the gold prices on account of West Asia crisis. And after a staggering 65% rally in calendar year 2025, gold prices are now down nearly 6% on a year-to-date basis. What are you gathering in terms of demand trends, both in the domestic market as well as in the international market?
I think this correction is something that is not very surprising in the sense that we were, in some way, the markets had totally heated up in January, and we've seen some corrections there. But I think the important thing is to look at gold's price not from the peak of January till now, but look at from a 12-month perspective and 24-month perspective. Now, a year back from today's pricing, we're still 40% up. I mean, that's very important and important limit that we have to maintain. Now, from a perspective, when the prices have corrected to the current levels, we've seen a lot of dip buying, a lot of consumers who hadn't sort of entered the rally at those levels of prices are entering the gold category. And that's one of the things. Now, in India, we've seen after the clarion call of the Prime Minister on the 10th of May, there have been some changes. The custom duties have gone up. And we've just released our last quarter results, which actually are not that negative. I mean, we would have perhaps anticipated that after the clarion call, there could have been a big drop in the demand of gold. It hasn't been that case compared to the same quarter last year.
Okay, and what is the sense that you're getting from customers on ground, Mr. Jain, since you head the association and the fact that you deal with a lot of traders and dealers on ground? Are customers waiting on the sidelines to buy more in anticipation of further fall in gold prices?
Well, I think India is a very unique market. When the prices start going down, we wait and watch. Once they stabilize, we start buying. Similarly, when the prices go up, we wait and watch. And when they stabilize, we go and buy. Now, I think in the current levels, the price correction, it seems, has happened and consumers are back. But also, after the clarion call of our federal Prime Minister, there's a lot of propelment around, exchange of old gold to new gold, which I think is a great sort of trend. The retailers are accepting old gold with open arms. And I think consumers are revitalizing and using the gold that was sitting in the lockers, perhaps, changing them to new trends, and adornment is going to increase. So we're very happy with what's happening. And from our perspective, the current level of pricing, there's a lot of consumers ready to wait and buy. We also believe that there will be a bit of preponement of the wedding purchase that has to happen in the next 4 to 5 months, because this level of prices, perhaps we've not seen for a long period of time.
Prices have already corrected quite a bit, at least on a year-to-date basis, and perhaps demand is also now emerging and people don't expect price to fall further from the current levels. But let's also understand the trends that are shaping up with respect to central banks buying gold. And we have seen that happen over the last several years. What are the trends emerging with respect to purchase of gold by central banks globally, including the Reserve Bank of India?
I think, if you go back 30 years, and it's important to sort of, explain to your audience, 30 years back, central banks used to be the net sellers and the main consumption of gold used to be jewelry. What's happened in 30 years and fast forward to today, the usage of gold is very diversified. Central banks now contribute about 20 to 22% of the annual demand of gold. And that's continued, that's sustained, and that's to do with how geopolitics plays out. That's to do with, a bit of de-dollarization. I mean, if you look at the global debt of the world, that's crossed $37 trillion, and currencies are getting printed left, right, and center. And hence, the confidence on reserves being in dollar-denominated, assets is reducing, and that's getting converted. And we at World Gold Council do an annual survey of the central banks, which we released a month and a half back. And what we came out as a survey is that central banks are looking at gold not from the short-term point of view, but a long-term sustained addition in their portfolios. So I think this trend of central banks buying should continue.
Okay, so the trend of central banks buying should continue. That's the word coming in. Mr. Jain, thank you so much for taking your time out and joining us from the sidelines of the event. And we look forward to interacting with you more often. Thank you for joining us. And with that, it's a wrap on this edition of the show. Thanks so much for tuning in. More news and updates will continue on the other side.